As my colleagues alluded before, we look at an upside potential of the portfolio, right? An upside potential of the portfolio significantly lower and didn't warrant an allocation to equities because, bond yields were much higher as compared to what the upside potential from equities was. And hence we were, telling investors to wait and watch rather than, getting into equities at that point in time. But if you look at now, that upside potential has gone to a reasonably respectable level where people can look at starting allocations. We are not saying we are out of the woods or, markets may not fall further, but this is the time you can start contemplating an allocation to equities if you're not allocated enough. So probably a time to, rebalance your portfolios to some extent, or start your staggered investment over and build it over next 6-12 months, because that is the opportunity that you may get from equity market standpoint. And if you look at our portfolios as well, there was elevated levels of cash that was in our portfolios, and that was not a macro call per se. It was because nothing was hitting our buy levels, and many things that hit our sell, we sold out of it, and nothing was available for us to buy, which led to our cash bulging. And hence, but now if you look at, there are certain opportunities that are coming closer to our buy levels as well. So from a market standpoint, we are seeing correction happen. And there are some opportunities. I'll not say there is a plethora of opportunities available for us to look at, but there are some one or two opportunities that are starting to come to levels where we are comfortable with. So probably a signal saying that, investors can start looking out at market currently and build your allocation over next few months and invest into equity markets.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.